Hi, and welcome back to your marijuana market update. I am John Ross, and today I want to dive into two big cannabis stocks, Tilray and Aurora. Each company made headlines on Monday. Tilray for releasing its quarterly earnings report, and Aurora for completing its 1-for-12 reverse stock split. In either case, it was not good news for these companies. And I'll dive in a little more to what's going on and what we should expect from the stocks, some of the numbers and things that were reported, as well as what the stock price is doing. Now, before I do that, let me remind you, if you like what you hear, make sure you click the subscribe button or the notification bell to make sure you don't miss any of the content we publish to this channel. Of course, leave us a like or a dislike to let us know what you think. Maybe drop us a comment or a question as well, just to give us some feedback to be going on. So let's start with Tilray, because Tilray reported earnings that had a lot of positive numbers in it when it comes to revenue and sales. They beat estimates on those fronts. Revenue jumped a lot as far as the quantity it sold and measured by kilogram equivalents, that jumped as well. So positive surprises there and encouraging for Tilray. However, with that growth came a much larger than expected loss for the quarter. It was about 4 times larger than expected, which is a big deal, and the stock price got hit pretty hard after the release in after hours trading, and then as we got further into this week. Now, when it comes to this loss, Tilray did issue some comments in its release. I just want to dive into that just a little bit real quick. It talked about how part of this loss came from costs from changes in warrant liabilities, asset impairments, currency translation, which is really just the import-export business from the exchange rate from Canadian dollars to US dollars or Canadian dollars to wherever product is going. Operations, which include things like investment and growth costs, as well as severance costs. So hopefully for Tilray, some of these big time costs are now out of the way, and the trends can continue in revenue and sales growth. A couple more things that I think are notable. The company reported that there was no material impact from the COVID-19 pandemic on the company's results. Now, I don't know if that's entirely true. Obviously we saw good sales numbers. You want to ask, of course, was some of the increase, the jump in sales and in revenues, was that due to maybe consumers front-loading demand to get ahead of the lockdown and just being stuck at home, or maybe some of these companies having to shut the doors? So kind of wonder about that and what that might mean then for the coming quarter, what the results might look like there if we will see that material impact from the pandemic. Another thing of note is that the company has been burning cash, so at a much lower level, under $100 million relative to what was considered a very good place about as little as 5 quarters ago, when they were up near $200 million of cash. Now, final note on Tilray, maybe we'll be needing to secure some new financing, perhaps because of the cash burn, because of the money that's gone into a lot of these expenses that have really driven this loss for the company. So Tilray, let's jump into a price chart real quick before we move on to Aurora. If we look at this daily chart of Tilray, it resembles the price chart we looked at for Canopy in last week's marijuana market update, in that the stock is trying to really rebound from its March low after the broad market sold off from fear over the pandemic. Now, if we kind of draw in a bit of a trend line to sort of what that bounce was looking like, you can see it really broke through and has moved sideways. So I think we should be looking at this sideways consolidation to get a sense of what might happen. We would draw in this sort of pennant triangle pattern just to show how the stock price is really coiling up. Now, The good thing is that when we see a pattern like this, it tends to, the price tends to exit the pattern in the same direction it entered the pattern. So in this case, we would expect some type of breakout higher in Tilray. And that breakout higher would match sort of the price action or the short-term trend that took the price into the pattern. So we would use an extension tool just to kind of draw from the bottom of the price bottom to the top of the rebound, and then down really to where the kind of the low point in the pattern. And that gives us a target of about 100% on the breakout. So that would take Tilray somewhere up to around 1350. And so that would be a pretty sizable move, almost a 100% move, maybe closer to the 80% ballpark. Very nice move. However, the pressure is on this stock. Let's get rid of some of these things just to get a sense that the indicator I use for timing my trades, it's running across the bottom here. It's essentially just a re-engineered MACD, which just stands for Moving Average Convergence Divergence. It's a very popular technical indicator, price indicator, and I've added my own twists to it to optimize entry and exit points, and to just know when a stock is a buy or when it's a sell. Tilray was a buy back in April. But since the indicator has moved below the blue trigger line, the buy has essentially been closed, and it's neither a buy or a sell at the moment. However, based on how these cannabis stocks are trading, based upon the continued headwinds in the industry and in the broad market, Tilray is likely to move into a sell, is likely to generate a sell signal on this indicator very soon. So definitely not recommending any urgent buys at the moment. If we do see some type of break back above the trigger line, and we do see some type of breakout out of the sideways coiling pattern, then Tilray might be a buy for very active and aggressive traders. But right now, the company still has a lot of things to work out. Now, all that said, consider that as we talk about Aurora. The company will report earnings today after the closing bell, and it's not looking very good. Aurora, in the most recent quarter that it reported, it basically set the stage for a lot more difficult times to come, and so a couple things to be watching here as we prepare for the earnings statement and just sort of what the future holds for this stock. Couple things to watch. EBITDA, earnings before interest, taxes, depreciation, amortization. That is important here because Aurora has structured some covenant lending agreements such that it has to see positive EBITDA by the end of the third quarter of this year, which is the end of its 2021 fiscal first quarter. So by the end of September of 2020, Aurora needs to have a positive EBITDA to essentially be good on its loans, on its covenant agreement in its loans. That's kind of a big deal. That's what people are watching. Then we got inventory levels. Inventories are building to the point where if inventories continue to build, it could become a headwind and require Aurora to essentially deplete and get rid of inventory. Also look at its bulk versus retail numbers. Retail brings a bit of a higher margin that Aurora is shooting for. Right now it's had a lot of bulk wholesale kind of products and serving that market. So it's trying to transition a bit to bring higher margins in. So interesting to see what happens there. Also making a lot of cost cuts. So I want to see if the cost cuts are going to help, if they've made headway there. And something that people are talking about is goodwill write-down. So essentially they acquired a company, MedRelief, and they essentially have $2 billion or more in goodwill, which is essentially an intangible asset that needs to be written down. Will they, continue writing that down in the most recent quarter when they announce, or will they try to kind of postpone that and push that back as much as possible? A lot of people worried that this COVID-19 pandemic will have a material impact on Aurora and Aurora's numbers. Maybe they're a little jumping the gun a little bit on that, based on what Tilray said. How if indeed sales and revenues kind of were front loaded by consumers, that might help sort of balance out the report when Aurora releases today. So that's kind of what we're looking at. I want to jump into a chart of Aurora now. And as you can see, it's been just a long, difficult, painful downtrend for this company. I don't see it improving anytime soon. Now, to speak to its reverse stock split that happened on Monday, essentially it was trading down at about 67 cents a share, and then the split brought it back up to about $7.40 a share, plus or minus. So that with that increased stock price came a decrease in the shares outstanding. So, existing shareholders did not gain value. In fact, they lost a little bit of value on the reverse split. So just something that the company had to do to keep their listing on the New York Stock Exchange. They have to average above $1 per share for a 30-day period, and they were not able to do that. So that's where Aurora is right now with their share price. Kind of uncharted territory here, breaking to new lows, suggesting that this downtrend is just going to continue. We might get a new real push lower, and that's just looking at breaking through support levels. I'll draw those kind of support levels in for you here. You saw it kind of tested the March low back in April, and is breaking below that now. If we look at the indicator across the bottom, the one I talked about with Tilray, Tilray was not yet had not yet kicked off a sell signal. It was no longer a buy. You look at Aurora here, and the black bars have moved to red, and that suggests that Aurora is now a sell. It's trading below that trigger line, so probably a good amount of downside still to come. We could maybe see a 10, 20, even 30% sell-off here. So needless to say, definitely want to wait till, unless you're a day trader type of mentality, definitely want to wait until after the earnings report to see if they're making any material improvements in cost cutting and a lot of other things that really have been weighing on this stock for a long time. But for now, this is a sell on Aurora. I want to stay away from this stock. Aurora is a big name, so Aurora, if it can get through this period of growing pains and sort of figuring out how to jumpstart its business in a very tough, difficult environment, then ultimately I think that bodes well for the long term for Aurora as the industry really sort of begins to mature. But for now, stay away from Aurora. Traders might consider short selling if that's you. Maybe consider buying some put options to play Aurora on the downside. But if you're looking to park money in a stock, for my money, it's not Aurora. If you had to pick between Aurora and Tilray, I would say Tilray gets the edge right now. But even still, maybe not the right companies for your money today. So I've talked enough. Hope that kind of sheds some light on these two stocks and what we can be expecting in the days ahead for the broader cannabis industry. Thanks so much for watching. Hit those likes and subscribe buttons, and make sure you check us out next time. But until next time, thank you for watching, and we'll talk soon.